everyone. Welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those of us joining us for the first time, I'm responsible for analyzing and identifying digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, we wanted to share with you some notable token price movements and what we think drove those moves. As a reminder before we get started, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, guys, happy merge day. If you have been living under a rock, today is the Ethereum merge. And we have been waiting for this for quite a while. For those who actually ended up staking on the original piece of Ethereum 2.0, the beacon chain, it's been like 21 months. So exciting that right now the merge is literally 9 hours away. So this was like I said, for those of you who don't know, I'm pretty sure most people do, but this is essentially Ethereum transitioning from the consensus mechanism of proof of stake, or from proof of work to proof of stake. So essentially Ethereum is no longer going to be mined. Users can stake Ethereum to secure the network and earn inflation rewards from the protocol. ETH's energy consumption is expected to go down by 99.5%, as quoted by the Ethereum Foundation. However, transaction fees and speeds are going to remain roughly the same. So I'll be honest, you're not actually going to notice a huge difference if you're just using Ethereum or using the blockchain. It's going to look and feel the exact same. The real change is happening for anybody who's mining and who wants to stake instead. So although this is one of the most significant technological upgrades Ethereum has undergone, we're expecting it to go off without a hitch. Ethereum developers have carefully tested the merge in several testing environments to ensure a smooth process. If anything, we could see maybe some nodes going out of sync, but nothing catastrophic. Like, I don't see the Ethereum blockchain going down. Obviously, do be aware, though, however, that most exchanges and service providers have paused Ethereum and ERC20 related withdrawals and deposits during that time, and even trading to some extent, depending on the impact they think it will have. Most people are being advised to not try to transact on chain during this time. So just make sure that you guys are not trying to put in a trade or deposit any ETH in case the exchange rejects it. So if you want to follow the merge in real time, I actually linked in the notes for the podcast, or whatever we call this, Twitter Live, sorry. Here, you can track it, but we're roughly about 9 hours out. And so that's expected to happen at around 10 p.m. Pacific time or 1 a.m. Eastern time. Exciting stuff. Despite all this, because we have such a terrible macro backdrop this week with the poor CPI print, or the above expected CPI print, Ethereum is only up 1.4% for the week. All right, next we have Polygon and its token MATIC. So Starbucks announced a partnership with layer 2 scaling solution Polygon for its Web3 strategy on Monday. So this is like huge news if you think about it. Like, Starbucks is there's like one on every corner, maybe two on every corner if you're in New York. But it's a massive, massive brand. And basically they're migrating their current Starbucks reward loyalty program to Polygon, and they're going to be issuing NFTs instead of the stars that you get for going there and spending money. They're calling the program the Starbucks Odyssey. So users are going to be able to access benefits and experiences using the NFTs. So it's kind of gamified. This is definitely an interesting strategy. If you've signed up for Starbucks's loyalty program, you would have noticed they do have a bit of gamification in the strategy in terms of like, hey, collect X amount of stars in order to get like this free benefit. So they're going to be doing the same thing, but they're going to be expanding the benefits offered, and it's all going to be on chain. So this partnership is a massive step for the mainstream adoption of digital asset technology, and could potentially bring in millions of new users to crypto. With all this, Polygon is up 2% for the week. Next up, we have the Near blockchain. Near is a layer 1 blockchain. It held its annual conference called NearCon this week, and it was full of major announcements for the protocol. The first one was that they announced launching a $100 million VC fund in partnership with Keras Ventures, targeting Web3 culture and entertainment. They also announced that the next stage of their sharding roadmap, which introduces 200 new validators as part of a 4-step plan to shard the network over the next year. And then finally, they also announced that USDT, which is the Tether stablecoin, will launch on Near. So all these are, very important announcements to kind of push the protocol and its ecosystem forward. And as a result of all these very positive announcements over the weekend, it saw its price move up 4.4% for the week. All right. And last but not least, we have actually a new issuance called Sweat or Sweat Economy. So Sweat Coin is a walk to earn Web2 company. And so if you're not familiar with kind of the blank to earn name, Axie Infinity was the one to pioneer the play to earn. So the idea that you play a game, you get kind of rewarded and, tokens by playing it. Earlier this year, Steppen was a project on Solana that was moved to earn. Basically, if you went running, you would earn tokens. They had a whole thing with their sneakers, but the basic premise is it's a model where you're rewarding your customers or your users for doing some sort of activity. In this case, Sweat Economy is a walk to earn app. So basically, they actually started off as a Web2 company or a non-crypto native company, and they recently announced that they're going to be tokenizing and spinning out part of its business. So this new Web3 business is called Sweat Economy. The original business is called Sweat Coin. And they're going to be issuing users Sweat tokens as a reward for being active. The new Sweat token is designed to give users access to exclusive merchandise and special offers within the new mobile app, which boasts 13 million accounts. Late Monday, Sweat just released, like I said, like the last couple days. It was late Monday night. The Sweat token listed on exchanges and was airdropped to past Sweat Coin users. The token ran up from its listing price of about 0.7 of a penny to 7 cents in a matter of minutes, and has since settled around 6 cents, giving the project a $143 million valuation. This should be a really interesting one to watch, like I said, just because I think it'll be really big for adoption. The project is bringing in so many more users into crypto that may not have had that experience before. And as a result, Sweat, even though it's only been trading about 36 hours, it is up 43%. All right, guys, that's all I have for you this week. Thanks for joining us. I hope you enjoyed our insights. Tune in again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.